Good morning. We will just begin the weekly outlook on the dollar index. For those that missed the last one, I will link the video in the description or probably in this one. But for those that know, the last 2 weeks or so, I was looking to see if we could sweep this low on the dollar index, because that is the yearly fair value gap right there. This yearly bullish fair value gap. So I was looking to see if we could tap into that before making a run up to see higher prices. But looking at the monthly chart right now, and considering the fact that we have one more week to go in this month, we can clearly see that liquidity decided to take the previous month's low. And right now, if we are not going to be if we're not going to have a consolidative week, I'd like to see if we could go for the opposite liquidity, which is the previous month high. So we swept the low from last month, and now I'm expecting us to move on to the next liquidity there at the high. I'm not saying that price could not possibly go sweep the high and then retrace lower to come back for this lows. So price could do something like this and come back for this sell side that we have in mind. And of course, price could then reject from there, pushing higher. So anything is still a possibility, but I'm just saying right now, the closest drawn liquidity, especially looking at this long tail, is a possibility of running these highs. So going down to the weekly time frame, we can see, measuring this range from the low there to the high, we came down to discount, which is anything below equilibrium, rejecting off of this weekly inversion fair value gap. We did not close below this inversion, and now I'm expecting us to move on to opposing liquidity. For the daily time frame, I am going to switch to the IPDA Data Range chart like so, and we can see on the daily, with the 20 days, 40 days and 60 days look back, we swept the 20 days low over there, got a displacement to the opposite direction, and got a market structure shift when this swing high right here was swept. But even with this swing high being swept, it was not validated to me, because we still had this fair value gap right here. So there was a chance that price could trade higher into this fair value gap, this CB, and decide to start moving lower. But pulling this out in time, we can see we closed above the fair value gap. So we invalidated this CB, and now has become an inversion fair value gap. So I was looking for the possibility of price coming down back to it, rejecting from it and pushing higher. And we can see that we had a rejection initially from the opening price of the month, trading lower into this bullish fair value gap, and now created a swing low, pushing higher, taking out the monthly high. So I'm looking to see if we can get the 20 days high look back targeted next, which is the swing high that we pointed out from the weekly and monthly time frame. So that's my draw on liquidity going into next week. I'm looking to see if the 20 days high can be swept as we close off the month. We can also look for I'm looking for a possibility of us having a fair value gap like here, a possible push up, creating this fair value gap from this high to the low of that candle, have something like that, swing high broken right there by a fair value gap, retracement down into discount for the month, preferably to the opening price, then a continuation higher. So we could see something like this form. This is of course the most ideal situation or scenario. It doesn't have to form exactly like this, but it's a possibility considering the economic calendar next week. We might not get a busy Monday, and we might actually create that fair value gap, but I would prefer to buy from the opening price of the month of March. So that's what I'm looking out for on the dollar. And the currency pair that I'm deciding to pair it up with is USDJPY. I don't know why I'm scrolling all over the place, but we have the dollar yen chart, and we have this swing high, which we can actually use a price. Let's use a price label. So right there, the swing high there from the monthly time frame is 151.946. We also have that swing high there, 151.912. So this high is actually the all-time high. It's not quite the same as this high, but we are very close. That from this point onwards, for the rest of the video, I'm going to be considering this as the all-time high, just for reference sake. So on the dollar yen chart, actually starting off with the monthly chart again, we can see price traded lower in this month. We did not sweep the previous month's low, but we traded lower into some measure of discount, and with the way we rejected aggressively away below the opening price and away from this low, makes me see some bullish price action coming up, and I see the possibility of us taking the all-time high in this month of March. So going down now to the weekly time frame, we can measure the same range from this low to the high, and we can see that we did not come down to the discounted level, which was partially what made me not participate in this move to the upside, because I wanted to see if there was a chance we could sweep this low, then a continuation to the upside from here. But we didn't get that, so I missed the whole thing. I just did not participate here. Going down to the daily time frame, as we did with the dollar index, we're going to do the same with USDJPY by going to the IPDA Data Range chart and see. So on this weekly time frame, we've got the all-time high. As I said, we're going to use this as the all-time high for now. Then going back down to the daily time frame, we see that price is a little bit cleaner. So on the daily time frame, we consolidated here. Well, the first half of the month of February we were bullish and price action was clean. Everything was moving straight forward, and I expected us to break out of this consolidation to sweep the all-time high before a retracement, but we didn't do that. We opened up here in the month of March, traded higher into short-term premium, then displaced lower. We kept on falling day after day after day after day after day. So this is more reasons why I said I was looking to see if we could sweep that low from the weekly perspective, because it's basically the same level, similar levels as the 20 days low, 20 days look back low. So I was looking to see if we could take that low, but we didn't, which is fine too, because we returned to a discount PDRA. I say that this is a discount PDRA because we opened up here where the EQ line is, which is our neutral or equilibrium for the month, our neutral level or equilibrium. So we went down into discount by trading lower than this EQ line into a PDRA from the daily. Of course, we didn't respect it perfectly, but we traded into discount is what really matters here. If we were following the daily trend formula, we would now wait to see if we would create a higher swing low, because note how we created a swing low right there. A swing low is basically this low has a higher low to the left of it and a higher low to the right of it. I know it might not be that visible, but looking closely we can see that this low did not actually clear this sell side. So this technically is a swing low, even though it might not look visible from afar. So we got this swing low forming. We would now wait to see if we could get another swing low, but higher than this previous one, higher than this one. And we can see as we trade in higher, we don't have a swing low yet, we don't have a swing low yet, we don't have a swing low yet, until right here we finally created our swing low towards the end of the month. So we now have another swing low here, And this one is a lot more visible because we have a higher low to the left and a higher low to the right. So this makes it a swing low. So from here, I'm expecting this low to be protected, and I'm expecting us to run to the buy side liquidity, which is the all-time high, which is just pips away over here. So even though for me personally, the most ideal place to buy would be anywhere in discount, anywhere below this blue line. And even now, if we had some sort of high impact news on Monday or Tuesday that somehow swept liquidity, clearing Thursday's swing low and tapping into this equilibrium price, I would definitely be taking this trade back up to the all-time high. But I don't see that happening unless the dollar does something extreme, but I'm expecting us to just run up from here to the buy side liquidity. So let's try and go to a lower time frame. Since we have a daily PD array here that we're working with, our lower time frame for entry would be the 1 hour. On the 1 hour chart, we can see on Wednesday we got so close to it. We displaced lower, short-term premium back above the midnight price, fell off from there, created the low of week on Wednesday, reversed, did not come back to the midnight price anymore from there, and just continued grinding higher, clearing Wednesday's high, then retracing going into Friday. So Friday we got a discount here below the midnight price. We got a dip down, and now when actually from here, from Wednesday going to Thursday, we've now tapped into that daily BC, and we are waiting for the hourly shifting structure. In other words, we're waiting for a high. From the time we tapped into this BC right there, from the time we tapped into it, we're waiting for a swing high that's broken, preferably by a fair value gap. But even if it's not by a fair value gap, a swing high that we got a candle closure above. And we can see we traded lower into the fair value gap, displaced higher. We don't have a swing high yet that we violated. We don't have a swing high yet. Right now, my eyes will be paying attention to this swing high because it's the only hourly swing high that we had at this point. Let's use the replay. At this point is the only high, it's the only swing high that we have yet. We can see price print, and we just printed another swing high. So now I'll be looking at this swing high and discard this one for now. I'll be looking to see if we could get a closure above this swing high, a candle closure above the swing high. Price is printing. Okay, we've swept it and we've closed above it. So now at this point, we've closed above the swing high. Let's see if we'll get a fair value gap there as well. And we do get a fair value gap. So right here, I would be looking for an entry to take this trade to the all-time high. That looks something like this. Taking it to the highs. And stop loss would be the third candle, the first candle that started a fair value gap, which is right there. Or if I'm not really feeling this aggressive, I could put it below these bearish candles, these two bearish candles. So the low of them would be right there. But some people can be extreme and decide to go for the swing low residing all the way down there, because the 2022 model preferably picks a swing low to put your stop loss at. So let's see how price prints out from there. We haven't gotten tagged in yet. We haven't gotten tagged in the trade, and now we are. So we got tagged in right there, immediately rejected higher, aggressively taking out this high. I'm not sure if we all see it. So price went down into our PD array, our fair value gap, and rejected aggressively to take out this short-term high right there. This alone is enough for me to pay the trader, enough for me to move my stop loss to break even, enough. When I say pay the trader, I just mean to take partials. When we sweep this high, I'll probably take a partial. When we sweep this high, I'll probably take another partial, waiting for the all-time high now, because every partial pays. So let's see if we get tagged out now, assuming that our stop loss is now at break even, right, like that. Let's see how price plays out. Okay, we immediately get tagged out right there. Then let's see how the rest of it prints out. Moves back down into discount, back down into deeper discount. So if your stop loss was here at the 3 candles low and you decided not to move it, you would have been stopped out here. If your stop loss was at the 3rd candle or the 1st candle, you would also have been stopped out. The only person that wouldn't have been stopped out is the one that chose the swing low to put their stop loss at. So let's see how price continues. And I think that's it. Yeah, that's where we stopped. So we swept liquidity by purging the sell stops. In other words, I can't really call it sell stops, but I could, for the sake of the video, call this as the sell side raid. So now we've stopped out certain individuals that bought. But one thing I noticed, that I'm noticing now on the hourly time frame, since we found our entry, right? Our entry was right there. Our market structure shift on the 1 hour chart was right there. So we got that. Let's clear this. Going into next week now, what entry would I be personally looking for? Well, one thing that I'm going to note is the fact that we got the 3 drives pattern that ICT teaches, which is basically liquidity sweep that happens twice. So we got a sweep in liquidity right there. Sell side was taken when people bought from there, as we saw, took buy side and came back to sell side. And then again it happened after coming back to discount, giving us hope that we're going to push higher. We came down and raided sell side one more time again there at 8 AM on Friday. So we got a sweep in liquidity that happened twice, which is what ICT refers to the 3 drives pattern because of these 3. So 1, 2, 3, and now we expect an expansion to the upside. Let's zoom out a little bit to the 4-hour time frame and try to measure the range. So we measure from the swing low all the way to the swing high. We can see that price returned down into short-term discount, and I'm expecting us to not even sweep this low from next week and clear the buy side liquidity from there. And even if we decided to measure to the swing high before it got swept this high, before it got rated there, it will still be a tap in the 50%. Perfect tap right there before rejecting higher. So I'm expecting higher prices going into Monday, and going into Monday and the rest of the week. How am I expecting to enter the trade? Anything above the midnight price is discount. Anything below the midnight price is discount, and anything below the Sunday opening price is discount. So I would look for buying opportunities from any of those time frames on an even lower time frame, like the 5-minute or 1-minute chart. So that's what I'm expecting going into next week. Actually going from Monday. We might get this move happen earlier on in the week, but we'll see how the week plays out based on the dollar index. So that's my expectation on dollar and USDJPY. The next currency pair that I have on my watch list going into next week is the EURAUD. I know it's an exotic cross pair, but something that I'm paying attention to. Does not necessarily mean I will be trading it though, but we're looking at it. So as we have here, we opened up at the month on the 1st of March, which is delineated by the blue line as I do, and we can see price trades higher, sweeping the 20 days high, displacing lower, creating a market structure shift by closing below the swing low right there. So notice how we close below a swing low. So this gives me an indication that price is likely going to be falling off from here and possibly going to sweep the important lows like 20 days low, 40 days low, and 60 days low. So as we see, price went through the 20 days low but did not close below the 20 days low yet, and we got a retracement back into the EQ, back into the premium, of the month, which is anything above the blue line, right? Notice how difficult it was for price to close above the EQ line, and definitely how price did not close above the consequent encroachment of this CB, the sell side imbalance residing here. So the dotted line there, as we can see, is the consequent encroachment, which is just the halfway point. Price did not even, the candles could not even close above there. And following the daily trend formula, we got a sweep in liquidity. If we are bearish, we would like to see a lower swing high, and we got that right there. Actually, let's use the replay mode. So we got a lower swing high inside of this fair value gap here, right, which also collides with the inversion from this side. So we could expect price to fall off from here, taking this low and probably going for the 40 days low next. But then price continues to print and we sweep that high over there. Because we've swept this high, we would now look for another swing high that's lower than the main high that we have over there. And over there we just created one. So we can get rid of this, get rid of that. So now that we've gotten a lower swing high confirmed by this candle closure, we would now like to see previous swing lows targeted next. And right now, what swing lows do we have? We have this swing low right there. We have this swing low right there. We have this swing low right there. And of course, we have the low of the month right there, if we are going to be truly bearish. And we see that we went straight for the three of them, 1, 2, and 3 lows. But we did not go for the last one, which is where we are now. And another characteristic that we know about bearish price action is that we find selling opportunities after bullish days. So right now this swing high is still protected. Right now price is showing me bearish action because of the fact that it's sweeping previous swing lows without getting this swing high swept yet. So we can see a reaction off of this imbalance, the CB, again on Friday. So I'm expecting a continuation to the downside, clearing that sell side liquidity and possibly this and the 40 days low. Because we are dealing with a daily time frame, we would likely find our entry on an hourly chart. So we would like to see a structure shift by a closure. We would like to see a fair value gap and then an entry to take it down. So this will be on my radar going into next week. But before we do continue, before we do actually move on from this chart, we should know, if you've been watching me for some time now, that I typically pay attention to the correlated asset classes or currency pairs or anything that might affect a certain trade idea, which is why I typically incorporate SMT divergences in my trade ideas and trade plans. So the correlated asset, the correlated pair in this case, because we are looking at a Euro AUD, would be GBPAUD. And we have an empty chart of GBPAUD here. For those that have not watched my IPDA Data Range video, I'm also going to link that in the description. But I'm going to plot out the IPDA Data Range schematics, if you would, for GBPAUD now from this empty chart. So let's get that done. Alright, so I am done with the IPDA Data Range plot out. We've got the 20 days high and 20 days lows, 40 days high and 40 days low, 60 days high and 60 days low, and we can also see the opening price of the month right there, which is the blue line labeled as EQ. One thing we can already notice here is that we have not swept the previous session low, if you want to call it that, the 20 days low over there. And the other thing we can also notice is that we have the same or similar fair value gap residing there, but we did close above the consequent encroachment of GA as opposed to EA. But one thing I find interesting is the fact that on Thursday we opened up right there, went straight to the EQ level and rejected aggressively from it, sweeping all these sell side liquidities, actually making a new low of the month on that same Thursday. So that's interesting to see. But the other thing that I find interesting again is the fact that we created a fair value gap here on the daily time frame. So this one is a little bit easier to work with. Yes, we have rejected from this higher fair value gap, but I'm going to remove that to remove distractions. But we have this internal range liquidity, so we have a fair value gap created there that I'm going to be paying attention to, because this is a CB that, yeah, which is I believe this might be the last one for the month actually, and I'm looking to see if we can target the 20 days low from there. So I'll set an alert for this fair value gap, because once we get into this fair value gap, I would look for an hourly structure shift and a probability or a setup for us to move from internal range liquidity to external range liquidity, and possibly the 20 days low, which is even more external than this liquidity here. So you get tweets and posts like that on Twitter that would look something like this. So I'm also looking for something like that. I'm looking for a possibility of us running the previous day high, which is Friday's high, then look for a structure shift on an hourly time frame, then a continuation to this sell side liquidity, and possibly the 20 days low. So this is actually the first setup that I will be participating in. I would have touched I would have attempted the dollar yen, but the way it's at an extreme premium right now makes me not want to attempt long in USDJPY or buying USDJPY. So I'll be paying attention to GA, and I would have been looking at EA, because you might be saying that EA would be a better sell, but for me, yes, we have swept the 20 days low there, which could indicate the weakness of Euro AUD, but the fact that recently we are even more bearish than the low that swept the 20 days low on Euro AUD makes me prefer GBPAUD as opposed to Euro Aussie. So I'll be paying attention to this trade idea going into next week, and possibly for the next few weeks actually, but primarily this for next week. The next and probably last, next and last trade pair that I have and that I'm watching for next week would be this NZD Swiss and AUD Swiss. So let's properly. So here from the weekly time frame, I'm going to be focusing on the most recent price action. One form of liquidity that I learned from Finesse, wickless candles, in this case would be, or as Sniper would call it, flat body tops and flat body bottoms. So we have no tail or no wick on these candles. So I'm paying attention to them. This one in particular on AUD Swiss. Longer term, but short term, we can see we have an SMT Divergence at the highs there, focusing on the high that was created on the 25th of September 2023, which is there and there. We can see that price ran those highs on AUD Swiss. Let me make that clearer That's the high. We can see price ran the highs, but here we can clearly see that we failed to sweep those highs. And one thing we also notice on NZD Swiss is this bullish fair value gap residing here. So we have basically the opposite of what we just outlined on GBPAUD, from internal range liquidity to external range liquidity. Here we have external range liquidity. Technically, even though we did not sweep the swing high or that swing high, we did sweep the previous week high over there. So we swept the previous week high, and now I'm looking for internal range liquidity. So external to internal. And obviously longer term, as I said, we might be gunning for those lows, but right now this is my drawn liquidity. And this is one of the few examples where I might be focusing more on NZD Swiss, obviously because it's the weaker one. So I'm looking for selling opportunities to take it to this fair value gap, this buy side imbalance, sell side inefficiency. Of course, when we get here, price may react and push higher or consolidate or close below. I'm not really sure, but I'm looking for an intraday or intra-week position to take it into this fair value gap. So now that we've seen the SMT at the highs from this time frame, let's move on to a lower time frame, which is the daily. From the daily, we can clearly see the levels of importance or the liquidity levels that I'm paying attention to. And even without the IPDA data range drawn out, we can clearly see that the 20 days, 40 days, and 60 days highs were purged at those levels. And the same, well, probably not the exact same with NZD Swiss, because we failed to sweep February's high over there. So that's the SMT that we're talking about. So that's why I'm focusing more on NZD Swiss. So zooming down a little bit more on the daily time frame, we can see that we have this sell side liquidity right there, which is the low of the 19th of March. The same sell side liquidity is over there. It's a swing low. So we swept multiple swing highs there. And we can confirm this to be a turtle soup because we just made a swing low from it without closing above these swing highs, rejecting from this bullish order block, bearish order block over there. This up close candle before the move down. So rejecting from that order block, we have a possibility of us coming into this internal range liquidity as I outlined. I don't see any proper PDRA here, but besides the liquidity, the obvious liquidity sweeps. Let's move down to the 4-hour time frame. Even though that's not a properly aligned chart, we can obviously see the consolidation. Well, we're actually moving higher on the 4-hour time frame here on AUD Swiss, but it was not the cleanest price action. We got retracements and then an expansion here on Tuesday, a continuation up to the upside. So I'm expecting this run up aggressively to be the manipulation leg, and I'm expecting us to trade lower, clearing the sell side liquidity residing below. So since we are focusing more on AUD Swiss, on NZD Swiss, I am looking for a possibility of us creating a swing low here. We just need a swing low here on the 4-hour time frame. The reason I'm looking for a swing low to be created here is because I would like to measure from the latest swing high, which is right there, to the new swing low. Assuming the swing low is going to be here, I'd like to see a retracement to short-term premium or just the equilibrium of the range, then a continuation down. So my mind is telling me that we're probably gonna get that short-term premium or equilibrium somewhere inside of this fair value gap. So we might get something like this, a swing low forming here without getting to our drawn liquidity, then reversal back into the range before a continuation down. So for those that need illustration, something like this, a swing low forming, reversal back into short-term premium into this fair value gap, then a continuation to the drawn liquidity. So I'm looking for something like this forming going into next week. I don't really have a strong or easy entry yet, So that's why I'm waiting for the swing low to form. We might just run down to the drawn liquidity and the idea will be scraped, but it is what it is. It's how trading is sometimes. So I'll be looking for this opportunity going into next week. It has not been fully developed yet, so I might just make an intra-week update on that idea. Then finally, before I end the recording, I'm not going to cover anything else from here, by the way, but I just wanted to quickly show GBPJPY with the same sort of idea. So let's start with EURJPY. Actually, because I am bullish on USDJPY, meaning I am bearish on the yen as a whole, I am looking for buying opportunities for GBPJPY, EURJPY, AUDCHF, NZDCHF, and of course AUDCHF. So I'm looking to see if we can continue higher from this fair value gap, but it might not be that clear because we might have to see from a higher time frame. So on a higher time frame, we see that we have this buy side liquidity right there, and we've been drawing to that from last year actually. So from last year I've been highlighting that drawn liquidity and we haven't hit it yet. Last week I saw that we respected this BC, came back to the other block, respecting the other block, and I saw this massive extension to the upside. So I was expecting us to close above these highs so that we could possibly find a retracement back down this week and a continuation higher. So since I'm expecting higher UJ, I'm expecting higher GJ as well, but it may not be the cleanest setup. Of course, we do have price tracing back down to the daily fair value gap. We have this daily fair value gap over here. Let's use this right there. So prices come down to the discount section of this fair value gap, and many might be asking why wait for the discount and why not just enter here. Well, for me personally, I would have started by measuring the range. I would have taken the last swing low that we got, which was right there, and then take it to the recent swing high, which is right there. And we can see that the only portion that I'll be focusing on of this fair value gap would be anything below the blue line. So it's basically the same as the consequent encroachment. In other words, I'll be paying attention to only this portion of the fair value gap right there. I'll be looking for buying opportunities from here. So if I'm really bullish on this and I really want to see us continue higher, I would wait for a structure shift on the hourly time frame. I see a possibility of us, since we ended with a consolidation, I see a possibility of us going for these liquidity down here. So we might get a chop around like this, then a sweep, displace, closure above a swing high, market structure shift entry, then a continuation higher. We might get something like this going into next week, going for those relative equal highs up there. So this would be an idea for next week. The reason I'm not paying attention to this as much though is because going back again to the higher time frame, let's go back to the monthly time frame. We can see this high is on the 1st of June 2015 compared to the correlated asset, which is EURJPY. On the 1st of June 2015 we are there, and we can clearly see that this high has been swept on EURJPY. So because liquidity has already been taken on EURJPY and the higher time frame draw and targets has been met, it makes me a lot hesitant in wanting to take this trade going into next week. But of course, as I said, if we get something solid on the hourly time frame on GBP, then GBPJPY, then of course we can take it up, which is basically the same idea that I have across the board on the pound crosses. So yeah, that's what I'm looking for going into next week. Stay safe, good luck, and good trading.